It's time now for business. Let's say hello to Kate Moody.
Hi, Francois.
And those activists who took to Reddit. Last week it was to save fledgling gaming company GameStop. Now they're taking on the silver market?
Yeah, going from the market, from games to commodities anyway, Francois. Silver squeeze is the hashtag that's been trending online and in forums like Reddit, as these activist investors seem to have switched focus now. The trading price of silver has popped as much as 13% today, reaching its highest level in over a decade. Now, as you can see here in this graph of the last 5 years, silver is usually an investment that remains fairly steady, popping just in the last year or so, and particularly in the last 24 hours. Last week, amateur traders were pouring their money into shares of the struggling video game store chain GameStop. They were basically hoping to squeeze big hedge funds who had bet against that company's fortunes. It's been billed as a David and Goliath market battle, pitting small investors against Wall Street giants. Well, over the weekend, it even sparked some demonstrations reminiscent of the Occupy Wall Street movement, partly because brokerage apps like Robinhood were restricting GameStop trades. Some analysts said this could be now a reckoning point for a somewhat overheated stock market.
Das Problem ist natürlich, dass wir dann irgendwann Preise haben für Aktien, für Silber, für Gold, die nicht mehr fundamental gerechtfertigt sind. Es bringt ja nichts, Aktien zu haben, die so hoch sind, dass man sagen muss, es ist ja völlig verrückt, die Aktie zu den Preisen überhaupt noch zu kaufen. Dann wird der Aktienmarkt natürlich dann zu einem Casino. Das darf man nicht zulassen. Man muss immer noch sagen, dieses Anlageobjekt kann ich fundamental einschätzen. Es ist zu teuer, zu hoch.
Let's check in on the rest of the day's trading action now. GameStop shares are down around 25% today. Trade was halted briefly earlier in the session. Shares jumping 700% rather last week alone. As you can see there, Wall Street is recovering from a bit of a panic at the end of last week, trending higher. The Dow Jones up about 250 points. The S&P 500 1.5. The Nasdaq popping over 2%. Earnings season continues with Alphabet, Amazon, Alibaba, and Pfizer among those who will be reporting their results this week. The major European indices closed higher as well. The CAC 40 and DAX each up over 1%. London's FTSE 100 up a bit less there. New data showed Eurozone unemployment held steady at 8.3% in December. That's over 13.6 million people. The UK has formally requested to join the trade agreement that replaced the Trans-Pacific Partnership. The Trump administration withdrew from that pact in 2017, leaving 11 countries, including Australia, Canada, Japan, and Vietnam, to sign a new version of it. 7 of those countries have since ratified the deal, which reduces trade barriers across 13% of global GDP. Well, since officially leaving the European Union, the UK has been brokering its own trade ties. And although it's not part of that regional grouping, the government says CPTPP would be a boost for British businesses.
More opportunities here in the UK, selling products, whether it's whiskies, cars, computer games, where there's growing demand in those markets. So this is a big opportunity for us, and it's very exciting. We're at the first stage of the process. But unlike the EU, there aren't the strings attached, so there's no court, there's no control over our borders, there's no money to pay in. So this is all about lowering tariffs and increasing opportunities for British businesses and British jobs.
They were the jewels of British high streets, and now they're heading online only. The internet giant ASOS has bought the Topshop, Topman, and Miss Selfridge brands from the collapsed Arcadia Group. It's part of a growing trend that's reshaping the retail world, as Ellen Gainsford reports.
Throwing a lifeline to the former high street giant, ASOS has inked a deal to take over Topshop. Once a symbol of British retail success, Topshop fell into administration in November last year, along with the rest of Philip Green's Arcadia Group and its 13,000 employees. It was a dramatic fall from grace for the retail mogul. This Monday, ASOS has announced it's buying Topshop, Topman, Miss Selfridge, and activewear brand HIT in a deal worth more than €373 million.
The acquisition of these iconic British brands is a hugely exciting moment for ASOS and our customers, and will help accelerate our multi-brand platform strategy.
But ASOS hasn't agreed to buy any of the brand's 70 stores, meaning around 2,500 jobs will be cut. Online retailer Boohoo is in talks to buy 3 other Arcadia brands, Dorothy Perkins, Wallace and Burton, also discarding their shops. It sealed a similar deal for the department store Debenhams last week, covering the brand and website, but not its shops, a loss of 12,000 employees. Arcadia's collapse has been among the biggest corporate failures of the coronavirus pandemic so far. Lockdowns have crushed an already struggling high street, accelerating the move towards internet shopping. Nearly 180,000 retail jobs were lost last year. Meanwhile, online retailers are booming and picking the bones.
Right, really a new world for shoppers there.
Indeed, online. Many thanks for that, Kate Moody. We'll have more business news for you later. It's time.